Good afternoon. Good afternoon. Good Friday. TGIF. Thank God it's Friday. Giving some time for people to come on in the room. Every time I say come on in the room, that song comes back to mind. I have to not always sing it, right? Because I'm usually thinking we could just sing it. Just sing the song. Okay. I'm updating something real quick that's going to run along the bottom while we're going. Options 411 for newbies. 2-day boot camp is coming on June the 7th and 8th. You can learn how to make consistent, steady. You get to control how much money you make from the market. I'm talking and typing, which is a recipe for disaster. Okay, I'm typing crazy. Yes, I'm is. Yes, I'm is. Register at educator2trader.com. Okay. Nope, gotta see. It gotta be com, not CMO. KKKKK. I think I've got everything there. That message will run across the bottom. So, good afternoon, everybody. It's Friday, good old Friday. The first week, well, the first few days of June have started. Um, I'm Arlissa Pinkleton. As you can see there, the educator to trader. Nothing I will say today will be trading advice. I'm just here to help, here to help people, or they say to help people. I'm here to help people utilize the stock market to make a consistent income. That's really what I'm here to do. You can read along the bottom. We do have the options 411 boot camp that is open for June. Oh, I almost said January. June 7th and the 8th, a 2-day boot camp will basically show you what you need to know in order to be able to make consistent money from the stock markets. A good intro. So for those people who maybe have an idea about that they'd like to learn about options, but they're not real sure and they want to know about that before they, jump in with both their feet and their wallets. They want to just check it out. So the 2-day boot camp is a very good way for you to see what it's all about. See what it's all about. Let me see. I got a comment up here. I'm also here to be fun. You better know it. You better know that this, listen, if this isn't supposed to be interesting, count me out. Because I personally need levity in my life. I need levity, laughing and joking, some stuff to have fun at. That's me. I'm all about a good joke here or there. Though I'm very serious about what we're doing here because I think what we're doing here is serious business. But I'm also here for a good time. All right. All righty. Let's get going. I have some trades. It's been a week or so. Not that this is important per se, but I had surgery almost 2 weeks ago. Yeah, the Lord is good. He's the healer. He healed me along the way, and my surgery and my healing hasn't gone bad. It's been good. I've been, mending and growing and trying to, rest my mind along with my body, which is probably the hardest thing. But I am back, basically. So I didn't do my live last week because I was on the mend. So now that I'm back and doing all of our good stuff, I want us to go back to the trades that we had, and then and then, update those. We got some good stuff we can update, and then look for some new stuff for next week. All right. So we can look for some things for next week. Sharing my screen. Yes. Let me. Yeah. We'll look for some trades that will be for next week too. Some seller stuff, because I coach sellers. I'm a seller's coach. Option selling. There's option buyers. There's option sellers. I coach the sellers. Selling is great because you get to collect your money on the front side. As soon as you enter the trade, the broker gives you your capital. Yeah. You can do whatever you want to do with it. It's yours to do with as you please. Alrighty, I believe everybody can see my screen right now. We've had some positions that we were doing covered calls with, and the covered call positions have closed, but now we still have 100 shares. This is what you do with covered calls. You have 100 shares, and you sell against those 100 shares. You sell covered calls, or you sell a call against those in order to generate income. So the first one we have here is AMC. Look here, we paid $4.40 for AMC. There's 100 shares, $4.40 per share. And let's go see if we can do a covered call for next week or maybe a subsequent week. Depending on the price of the shares, sometimes you can't really get good returns on the money. It's a $4 stock. You can't expect, $30 and $40 and $50 out of something if you paid $4 for it. All right. You have to be realistic. Okay. Just know we have to be realistic. So I paid $4.40. I'd like to go. It's already up at $4.55. I'd like to go at least to a 5 strike for the call. Notice we're on the call side looking, and I'm on the single chain. I'm looking under bid because I'm a seller. So I'm looking at the 5 strike. The 5 strike for next Friday, June the 9th, is going to be $6. I mean, you touch it, it's still $6. Well, you're going to spend $1.50 at least on fees. So, well, no, you're only going to spend 65 cents on the one side. You're going to spend less than $1 on fees. So you could take $5 as profits. Not bad. Let's see what the 16th offers, though, for the 5 strike. If the 16th has $12, yes, $12, we're going to pay $1 in fees, means $10, $11 we get to keep. That's a 20% return on where we are here. I don't know if that's 20%. No. $455, you're going to collect 10. No, that's not 20%. No, it's not at all 20%. It's more like 3 to 5%. Yeah. So let's look again. $12 isn't bad though. So, but let's look on the 23rd just to see if that's what we want to do. This is where you measure out how long do you want to let the trade go before you close it. How much you want to pull in for capital, right? And how long of a time do you want the trade to run? As a seller, closer expirations are your friend. Theta is our friend. So we can get right up on the same day if we want, or we can go out a little bit and pull in more premiums. Looks like if we go to June the 23rd, we can collect $21. I'm going to look one more place. Just look at the 30th to see what it's offer. Oh, $30 for the 30th of June. That's about 4 weeks out. So I think I like the 23rd. That's about 3 weeks out. I'm going to go with that. So I'm picking the 5 strike because that is higher than the current price and it's higher than what I paid, right? If you want to make sure that you are above your cost basis when you're doing covered calls. So we're going to go in, we're selling one contract of covered calls against AMC against our 100 shares. This is called covered calls with shares. Let's look at EOSE. EOSE, we also have another position with EOSE. Let me close the AMC one. EOSE, 100 shares we've got there. We can do covered calls again. We paid $2.19. It is now worth $2.31. So we got a little bit of a profit, 12 whole dollars. But we can sell covered calls against this. We need to cover call it above what we paid. You got a covered call above what you paid for it, above your cost basis, as it's called. It's called a cost basis. So we paid 219, so we can go up to a 2.5 strike. Well, for next Friday, 2.5 strike is only a $5 in premium. No, we don't want that. 2.5 strike for the 16th is a $10 in premium, getting better. Let's look at the 23rd again, since we did the 23rd on the other one. There's no 2.5 on the 23rd. You have to jump up to a 3 strike, which not so bad, but you don't make as much money. So let's go back to the 16th. I'm going to go to the 2.5 strike for the 16th of June, and I'm going to pick the bid column again. $15 we're taking in premiums. I'm cool with that. And this is the thing. I paid $219 for it. If at the time we get to June 16th, it passes the 2.5 strike, then the shares will just be taken away at $2.50 a piece, which is fine. I paid $219. So if I paid $219 and I sell them for $250, then that's profit for me. Right? That's what, $31 in profits, right? Plus I've had premiums that I've collected from the covered call. The whole point is that you buy at one price and you sell at a higher price, right? This is part of the wheel strategy where you own shares and then you sell covered calls against them until they get called away. Once they get called away, then you go and you start again. You do the wheel again. Nothing's going with General Mills. I actually got rid of those. Okay, let's look. Oh my goodness. Our Home Depot verticals from a while back. We did these a minute ago, a couple weeks ago at least. But look at here. This is our profit. Our P&L open says we've got $80 that's open. We did a credit spread. Iron Condor, actually, we did a put credit spread and a call credit spread. These are ready to close. Our put side was a low of 260, which price is above that. It's at 294. And our 315 call is the prices that needs to be above. 315 is above, and that's still in between. So we can close both of these. How do we close credit spreads? We select both of the lines, right? This is Thinkorswim I'm using. We right click, create closing order, and you buy it back where it's worth. It's worth $6. We collected, let's go look real quick so you can see what's going on here. We collected, the difference between these two numbers is what, $54. We collected $54 for this spread, and we're going to close it for $6. They gave me $54. I'm paying them $6 back. That means I'm keeping what, $38, right? I'm keeping $38, $48, something like that. Okay, right click, create closing order. We're buying back to close. I'm closing the put side first and then the call side. You can close them all together at one time, but it's, better if you just close them separately. You close them separately. Okay, let's go to the other side. We can go to the call side of this Home Depot trade, right? We can close this too. Looks like we collected $50. The difference between these two, 137 and 87 is $50. We collected $50. We're closing it for 19. Still good. That's more than a 50% return. It's like 70 something percent return on our spread. We're going to buy it back for $19. Well, at least we're putting the order in. Sometimes you have to put the order in and then you just have to wait for the monitor to see like what's working. We have one order working right now, which is just that last one. Lets you see what's in the function, what's in work, right? What's in the box to be worked. Let's move on. All right, we've got JD.com. So real quick, while I'm in the middle of this, if you're, here watching us, hanging out with us, definitely subscribe to the channel, like the videos and such, pass the word on to your friends that the option sellers are over here. Our Alyssa, educator to trader, we're over here doing our thing, right? Also, this is covered calls. We're talking about covered calls and verticals. Those are courses that I have at educatortotrader.com. If you want more specifics on how to pick to get in, what to do to get out, what's the, how do we do along the way? What happens if you start to, if your trade gets breached or gets challenged, what do you do then? All that stuff is inside the course, right? I'm just running through the steps and such in a quick manner because these are things that I teach and I coach all the time. Let's look at JD. JD looks like we paid $36.50 for the shares, but it's currently at $35.66. Remember, we have to do a covered call above what we paid, not above what current price is. You got to do above what you paid. So in case they do get called away, you won't get called away for a loss, right? You want shares to be called away for more than what you paid for them. This is what we want. Yes, absolutely. All righty. If you're making any comments, I cannot see them because I am sharing this screen. I'd have to go. So if you're making comments, comment on Facebook or comment someplace else so I can see them. Okay. So let's look at JD and a covered call there. What are you doing? Oh, I'm on a live video. Send me a quick message so I can see what you're talking about. Okay, so let's look for JD. We paid 36.5, right? So we need to do a covered call at least at 36.5 or higher. So if we do June the 9th, which is next Friday, we could take in $41 in premiums for that, which is, I guess about, no, that ain't 10%, more like 1%, $40 if you pay 3,500 or four. Yeah, that's not quite. So we could go with $40 there, or let's look at the 16th. See what, the money's looking better. It's looking better. $92 you could get on the 16th. Let's look at the 23rd. Since we did the other ones on the 23rd, we could, keep some consistency. There's no 36.5 there. You got 36 or 37. So I'm going to go back to the 16th again, just like we did on the last time. 36.5 is what we pay. We probably should go to a 37 strike. This is $76 here. And I'm going to go look at the 23rd again anyway. 37 strike, yeah. Let's go with the 23rd. The 37 strike. Remember, we paid $36.50. We need a 37 strike. We're gonna put that in. Maybe change this to even $100. We're gonna collect for premiums. Let's see if we can change it to a flat out $100 there. See if that will allow us to get us some more premiums. If not, it's already there. Yes. If not, you just you adjust it till it does what you want it to do. That's how that works. Okay, that is JD. Palantir. Now look at here. You see in the P&L open, this trade at this point is not profitable, but it is going to expire today. So because this is expiring today, we need to look at it a little more perfectly. Now, this is my sim, so I've not looked at these things very closely since I've done the videos, but we definitely would want to, if you were trading them, you would, you'd watch a lot closer to see what was going on with your trades. You wouldn't, get to the last day and be like, I can see what we're going to do. If you got good prices, like this put side is good and profitable. You see here, it's worth nothing. Basically, it's worthless. We collected $5 whole. We're now basically going to just let it expire worthless. The problem the one we do have is the 11.5. We collected $5 here too, and it is currently breached because this should be below 11. It's currently breached. Hold please. Let me see what's going on. Okay. It's currently breached. We can really just leave it. You can close it where it is. Pay your money to buy your way out. The buying your way out is probably the best thing. Otherwise, the broker could assign you the shares, which I did a video on YouTube last week about help I got assigned. And anytime you're in the money on a sale strike, on a sale leg, the broker can assign you the shares. Now, you saw on the video, assigning the shares is not really a big deal. But if you want to just avoid that, you just buy the trade back and not worry about any of that happening. So I put in the order to buy the Palantir side that's in the money to just buy it back. So I don't have to worry about getting assigned after market closes today. Just be done with it. Let's see. We'll give it some time to see if it closes. All right. Last but not least. Oh, well, our Zim trade. Yeah. Last but not least, our Zim trade. We have a covered call already in working, right? We collected $11 in premiums. It is now worth about 2 or 1.5. So we can, I sent you a message so we can close this and maybe enter another one. Create a closing order for the Zim covered calls, right? We'll close it at the $2. That means we got to keep 9 of those dollars. We collected 11. We're buying it back for 2. We get to keep the $9. Wonderful, because we have 100 shares. Now that we see that, we can go back to look at Zim and see about doing another one. Now, this is another one that's upside down. We paid $22 for these shares, but right now it's only worth 14 and some change, right? So sometimes you have 2 things you can decide you want to do. Do you want to continue selling covered calls against a stock that has dropped a lot? Or do you want to go ahead and just sell it, accept the loss, in this case, $700 of a loss, right? But it's down about 34%. You have to feel like you believe it's going to come back up. Or, you kind of got to think about it. Do I think it's going to come back up? Is it going to be worth holding on to? Is it going to be worth continuing to sell covered calls against? And you have to see, well, we need at least a 22. We need at least a 22 strike on Zim. And a 22 strike on Zim is zero money on June 23rd. So you may not want to hold on to it. You might just decide this is ready. This is one that I can just, close off, cut my losses, as they say, cut bait. I've heard it called a few different things. Cut your losses, cut bait. Just decide I'm just going to leave this one, take the money that I have left and run. And nobody wants to, close up on $760 something. But if you can't get the money back in covered calls, you can take the money you have left out of this 2,200 and go do something else with it. Go do something else with it. So that's what we're going to do. We're going to sell our 100 shares at this point. Okay. What time's your appointment?
No, I thought I told you. It's blood work.
What time?
I said before 3. I need to go.
Okay. All righty. Okay.
So,
all right.
I'm going to come out.
Okay.
Okay.
All righty. So we've covered all the stuff that we already had in our coffers. Now let's see if we see anything that's interesting for subsequent weeks. What I do, I'm not sure if you've ever heard of bar chart. I'm going to stop sharing this screen. I figure out, there we go, stop screen. There we go. Do I have any comments? I have absolutely no experience with this type. I do offer personal training. Hi, Ms. Margaret. I do offer personal training. We actually have the Options 411, which is a great way to, the boot camp is a great way to really get a good look at what is she talking about. That's a good way to get educator to trader. Yeah, a good way to see what I'm talking about for a small, what some would call small outlay of capital, where you get a good overview. We go a little bit deeper than an overview, but you can see what we're talking about and see if going deeper is something that interests you. because you know, I don't want you to spend a bunch of money on the front side and realize partway through this ain't for me. You can do that in the boot camp and then decide that whether that's for you or not. Okay, cool. Definitely, we're always open to having the folks come and see what's up with us. So let's look. We've got a few we can take a check at. Looking at some that have high implied volatility percentage. High implied volatility percentage or percentile. Let's say, do I like this one? Microvision. I'm just going to look at some charts here. I'm going to present. We'll see what we see on some of these screens and see if anything catches our fancy. Let me see if we get a chart. We got some things that we recognize: Microvision, Groupon, Nikola, which I don't think I do Nikola or Nicola. Their price is only 58 cents. I try not to get too low in that. Let's see who else. Tilray, we've heard of Tilray. Dish Network. Dish is one we can take a look at. Oh, Big Lots. Oh, did y'all know Big Lots was only worth $5.90? I thought it was worth more than that. I thought it was worth more than that. Okay, let's see which ones we're gonna look at. Let's look at Big Lots. I don't know if I've ever looked at Big Lots chart to see what they got going over in the Big Lots. This is the chart for Big Lots. I believe Big Lots is a 50-cent spread, which is always good because that means you only need to put up $50 of capital or collateral, not really capital, $50 of collateral. When you're looking at spreads, I'm trying to decide whether I want to really go into spreads or I want to stick with selling puts and covered calls. I think I want to just stay with the puts and covered calls because of the fact that there's so much more of a straightforward strategy. When you start talking spreads, you got to get a little bit deeper in the woods. Actually, Big Lots might be a good place based on where we see on this chart. Actually, would be probably a good place to do a cash secure put. You've seen it come out of the supply area and it's up here above that. So you could do support is down here about $5. So Big Lots, $5 support area. So if you were looking to sell a cash secured put on Big Lots, basically saying that I'm going to leverage my capital, collect a premium while I wait, quote unquote, for the stock price to come down, or I'm going to collect premiums while to see if the price comes down, and I can buy the 100 shares if I'd like, right? I'm going out to the July 21st time frame, cash secure put, which this is the first time we really talked about selling puts, but you sell a put below the current price, believing that price will stay above that. And if it comes down to that, then you get the 100 shares. This is the way you start the wheel. The wheel is you start the wheel with selling puts. So I'm picking the bid column on the put side. We're selling puts. This is probably the first time I've talked about selling puts on any of these videos, but we're going to sell a put on Big Lots. Let's sell a put on Big Lots. Let me go here. I need to look on a different screen over here. I'm going to wrap up probably about 5 or 6 minutes. We're going to wrap up this here live call. Oh, I want to look at one thing before we leave though, and that would be an XSP vertical. We see what the XSP or SPX has just moved on up out the way today. I thought it was going to kind of be a consolidationary day. I'm not sure if that's a word, but it hasn't been. The point is it has not been. Maybe because it's the first of the month. At the early part of the month, seems like the first few days of the month always want to go green. The first few days of the month like to go green. We've already got AMC in our arsenal. Let's look at Neo. Anybody do Neo? Let's look at Neo. See what, it's been a minute since I looked at Neo too. Neo is the electric cars. I think they originate out of China. Let's look at the chart first, see what the chart shows as far as support. Yep, Neo's got some support down here in the area of $7, maybe 750. It's got some support. I don't know if they've got a 750 strike. Yeah, they do. So for the 23rd of June, 16th of June, 750 strike. Yeah, 750 strike would collect $45 in premiums. If you go out a little further, I kind of like to get close to 10% premiums if I'm going to leverage, because basically when you're doing a 7.5 put, what you're allowing for collateral is 7.5 times 100 shares. So you're allowing $750 of collateral to be used. So if I'm going to use that much collateral, I feel like I should get close to 10% return on my money. So I went out to the 21st of July again, and I'm doing the 8 strike, which nope, I don't want that because the price is only at 7. So let me go back to the 14th of July and pick the 7.5 strike. This gets us close to 10%. We're going to collect that, selling the put on Neo for the 14th of July. 7.5 strike means the broker will leverage $750 minus the amount of collateral that you take in. We got one more we're going to look at, and that'll be Space. This one is only, Space is a $3 stock, 3 and some change. This is Virgin Galactic, 3 and some change as far as the stock price. So you won't be leveraging as much capital when you are dealing with these. Remember, whenever strike you pick, you multiply that times 100. That's how much capital the broker will reserve while the trade is going. Okay. So we're talking about 3 here is the support area, 350, just about. Let's go look at Space. 350. I'm going to go up a little bit closer, see if we can get 3.5. That's not going for $350. We need to get a little more. 3.5. This is about half of that. That's about 5% return. We want about 10% return if we can get it. If we can get it, let me see. One more pull. Nope, that was 30th of, maybe July 7th. July 14th. We're getting closer. Get a little closer. Okay, July 14th. Let's go there. We can collect $31. 3.5. Hold. Wait a minute. We can get $31 in premiums for a 3.5 strike, right? Let's go ahead and do that cash secure put. Let's go ahead and do that. Okay, so we did Space, we did Neo, and we did we do one more? Who else did I do? Let me go look at the field orders. Space, Neo, we had done Palantir. We closed. Big Lots. We did Space, Neo, and Big Lots selling puts. Again, another course that's inside of the Educator to Trader community, because all of these are seller strategies. All of these are seller strategies, right? We'll put those on. We're going to come back next week and see how they're doing, see how our covered calls are doing, see how these are doing, and we'll go on with that. All righty. So as I mentioned, the Options 411 boot camp is June 7th and the 8th. We're going to basically be introducing options to those, introducing and going a little deeper. For those who are interested, go to educatortotrader.com to see what that's all about. Please like and subscribe to the channel. Please pass the word to your friends. Pass the word. Pass it on. Pass the word to your friends. If you're looking for me, I'm in all the places. Educator to Trader. I'm on IG. I'm on TikTok. I'm on Facebook. I'm on LinkedIn. I'm on YouTube. Just look for me in all the places. All righty. So you all have a really good weekend. and enjoy your time. All right. Enjoy your downtime from the market. All right. I'll see y'all later. Goodbye. Goodbye, sweetheart. It's time.